Bitcoin is pumping, altcoins turn green. Is it okay to buy now? Hello, welcome to Mr. So Crypto, the hangout spot for crypto enthusiasts who don't just follow the hype, but also understand the risks and strategies. Today's topic might make you nod in agreement. Bitcoin soars, altcoins turn green. Is it still okay to buy now? Yes, we all know. A month ago, Bitcoin was still at around $76,000. Many were indifferent, many were pessimistic. But now, boom, the price has broken through $123,000. Altcoins are also rallying. Those that dropped are now up by hundreds of percent. What was once red is now green, like a fertile field after rain. But here's the critical question. Is this the time to jump in, or should you wait? Is this the start of a massive bull run, or a classic FOMO trap that's sweet at the beginning but bitter at the end? If you're feeling like you're missing the boat, relax. You're not alone. Many newcomers, and even experienced traders, are starting to feel anxious. Should I buy now before it gets even more expensive? Or wait for a correction, but fear I might not get this price again? Relax. This podcast will help you assess the situation objectively. We'll discuss 1. Does Bitcoin still have room to rise? 2. Why does the market seem so greedy right now? 3. What's the status of altcoins that have already doubled in price? 4. And a realistic strategy if you still want to buy now. Remember, we're not financial advisors, but we're also not dreamers hoping for instant profits without understanding the battlefield. If you're ready to think rationally, listen until the end. Because the best decisions come from sufficient information, not fleeting emotions. Chapter 1. Bitcoin tests all-time high, ADH again. Alright, let's start with the king of the market, Bitcoin. Recently, the price of BTC broke through its all-time high. A new all-time high of around $123,000, up from $108,000 in just a week, and from $76,000 a month ago, which is rapid. ADH zone equals critical zone. If you're new to the crypto world, remember, ADH equals all-time high, the highest price in history. When BTC touches or surpasses that level, the market usually reacts strongly. 1. Bullish breakout, prices continue to rise due to euphoria plus FOMO, especially supported by institutional flows. 2. Heavy rejection, many traders/whales sell aggressively to take profits at the highest price. Currently, Bitcoin is testing the main resistance level, the area where many large wallets begin moving coins to exchanges, signaling readiness to sell, a sign that distribution is underway. Selling pressure remains high. On-chain data shows tens of thousands of BTC moving to exchanges in large quantities, an indication that whales are starting to take action. Additionally, transaction volume at ADH prices is also increasing, reinforcing the suspicion of distribution rather than accumulation. What does this mean? Buying now means entering an area where professional traders are starting to exit. Principle 1. Buy low, sell high. Basic principle. Low prices equals many are afraid, sell panic. High prices equals many are greedy, FOMO. Now, many people are starting to feel like they're missing the boat. Social media is filled with excited comments. Bitcoin is already at $123,000? We're late, aren't we? What if it breaks through $130,000? Stop for a moment. Don't buy out of fear of missing out, but because the price is offering a promising entry point. Entry strategy in the ADH area. If you're still interested in entering the market at this time, you need a solid strategy. 1. DCA, dollar cost averaging. Enter gradually. Don't put all your capital in at once. 2. Tight stop loss. Set an automatic risk limit, e.g., 5 to 7%, so you don't panic if the market corrects. 3. Monitor volume and breakouts. A strong breakout supported by high volume could signal a continuation. If it's weak, prepare for a pullback. 4. Long-term horizon. If you're a hodler holding for several years, the ADH area can be acceptable, as long as it's not hot money. Additional insights. The chart shows a bullish continuation pattern like a pennant, but there's also RSI divergence, a sign of potential short-term correction. Liquidity in the ADH zone is very high. Stop hunts could occur, so be prepared if prices suddenly spike up/down within hours. Regulatory momentum in the U.S. is highly supportive. Crypto Week, the Genius Act, and the Clarity Act are under discussion, plus the massive influx of spot ETFs is solidifying institutional support. Chapter 1 Conclusion. Bitcoin is not cheap right now, but it's also not absolutely dangerous. This is a zone of opportunity plus technical trap. If you want to enter the market, understand the risks. Have an exit strategy ready. Avoid FOMO. Use funds you are willing to lose without stressing over it. Because if you make a mistake, even if Bitcoin keeps rising, you can still suffer heavy losses. Remember the saying, it's not the trend, it's the entry that matters. Chapter 2. The market returns to greed. If you've been in the crypto world long enough, you're probably aware that the market is driven not only by news or technical analysis, but also by two primary human emotions, fear and greed. And right now, are we at the edge of the spectrum? The market is greedy but hasn't reached extreme greed yet. Fear and greed index, rising into the greed zone. The simplest yet most powerful indicator for gauging market sentiment is the fear and greed index. As of mid-July 2025, the index stands at 70, falling into the greed category. What does this mean? Most market participants are currently quite confident. They feel prices will continue to rise. By now, no problem. Prices rose $1,000 overnight. Normal. Bitcoin to $150,000? Already considered a mandatory scenario, not a possibility. However, in crypto history, every time this index enters the extreme greed zone, it is always followed by a correction, whether small or brutal. So stay cautious, because we're almost at the extreme greed level. If you still want to buy, consider the risks that may arise or set a tight stop-loss order. Mass psychology. Logic dies when greed lives. There's a reason why Warren Buffett said, "Be fearful when others are greedy, and greedy when others are fearful." When people are greedy, they no longer buy based on analysis. They buy out of fear of missing out. They're not seeking profit. They just don't want to be the only ones left behind. And ironically, this situation mirrors what happened a month ago, but in reverse. When Bitcoin was at $76,000, everyone was afraid. Everyone was pessimistic. It'll probably drop to $60,000 first. Don't buy yet. There'll be a crash. Turns out, the price rose by $30,000 in a month. Now the price is $123K, and everyone is greedy. This is a bull run. Bitcoin will definitely hit $200,000. If you don't buy now, you'll regret it for the rest of your life. Be careful. It's precisely when the majority is overly optimistic that risks begin to loom. Corrections are not if, but when. In a healthy market, corrections are a natural part of the cycle. No price rises indefinitely without a break. Corrections are actually important for eliminating short-term speculators, validating the strength of demand, making the next rally more stable and robust. The problem is, if you buy out of greed, you're not mentally prepared for a sudden 10% to 20% drop in price. You panic. You blame the market. But the problem is your expectations, not the market itself. Case study: when greed ruins strategy. For example, you see BTC rise 30% in a month. Altcoins rise 100% to 300%. Then you buy an altcoin for $500 because you're afraid of missing out. The next day it drops 15%. You panic. 2 days later it drops another 10%. You cut your losses. A week later, the price returns to its original level, and you can only sigh in frustration. Why did that happen? Because you entered with emotions, not a strategy. You forgot that the market doesn't keep rising. You bought at a high price. Not all coins rise together. And you didn't set a stop-loss order. FOMO is a cycle. It comes, and it can also go away. The feeling of everyone else is making money except me is extremely toxic. Because in reality, many people appear happy on X, Twitter, or Telegram groups, even though their portfolios have already dropped, but they don't admit it. Many traders only post when things are green, but no one uploads screenshots when everything is red. You must realize that FOMO is a cycle and can reverse at any time. Today people are greedy, tomorrow they might be scared again. What can you do? If you feel the market is too greedy, don't rush to go all in. Some wise steps you can take. 1. Take a defensive position. Reduce your positions in altcoins that have risen too high. Shift to stablecoins or BTC. 2. Delay your entry. Wait for a small correction to enter at a more reasonable price. 3. Create scenarios. What will you do if the market drops 15%? Ready to buy more? Ready to cut losses? 4. Go against the trend with logic. When everyone else is greedy, you should start using a calculator, not emotions. Conclusion of Chapter 2. It's not about whether you should buy or not. It's about, can you think clearly when most people lose their rationality due to euphoria? Remember, greed makes people over-leverage, enter without analysis, unprepared for losses, and ultimately blame the market when they get stuck. Don't become a victim of the same cycle. Be the person who can say, okay, everyone else is buying, but I know why I should wait. Because in the crypto market, patience not only pays off, but also allows you to survive. Chapter 3. Many altcoins have risen hundreds of percent from their lows. Okay, now that we've discussed Bitcoin and the current greedy market conditions, it's time to take a look at altcoins, the supporting players that often bring quick profits and quick losses. Because now many people are starting to shout, hey, this token has risen 200% in 2 weeks. My coin is already 3 times its low price. If you miss out now, you might not get it again later. But before you jump on the bandwagon, let's discuss one important thing. A big rise from the bottom doesn't necessarily mean it's still worth buying now. Many altcoins have rallied wildly. If we look at the market data from the past 2 months, Ethereum, ETH, has risen over plus 51% from its lows around $2,344 to above $3,540. Altcoins like Pengu, Bonk, Uni, and Hype have rallied over plus 50% to nearly 200%, all within less than 60 days. Does this mean you should buy now? Hold on, don't rush. Big gains is not equal to still worth chasing. Remember the simple principle. The higher the price from the low point, the greater the risk of a retracement. Meaning, if you buy after a coin has risen 200 to 300%, you're not following the trend. You're buying from people who are ready to sell. Why? Because those who bought at lower prices have started taking profits. The coin's market cap may already be overvalued. The potential for correction is growing, especially if the BTC market starts to sideways. Insight: look at volume and sentiment, not just charts. Many coins rise not because of solid fundamentals, but just because of narratives and sentiment. There are several factors you should check before jumping into an altcoin that's already skyrocketed. 1. Is volume still high or starting to decline? If volume is drying up, it's often a sign the impulse phase is ending. 2. Social media sentiment. If X, Twitter, YouTube, TikTok are filled with "to the moon" posts, you might be late to the party. 3. Has it entered the redistribution phase? Be cautious of sideways charts at peak prices. This is often not healthy consolidation, but the start of a massive distribution. Smart strategy: don't become exit liquidity. One common beginner mistake is buying when the market is already overly optimistic, then becoming exit liquidity for early buyers. Try checking which coins haven't risen significantly but have potential. Are there any newly listed coins that haven't yet experienced the hype? Are there any narratives that haven't yet exploded, e.g., real-world assets, DePIN, ZK Sync, modular chains? You can use heat maps, altcoin dominance charts, and social sentiment tools like Lunar Crush or Santiment to help with screening. And don't forget, if you still buy coins that have already risen, keep your position small. Don't overallocate. Always set a tight stop loss. Market reality: the higher it goes, the more emotional it gets. The current situation is very similar to a mini alt season. All coins are rising. All influencers are shouting bullish. All Telegram groups are buzzing with new coin recommendations. All YouTubers are giving bombastic targets. But it's precisely at that moment you need to be more cautious. Because when everyone is certain it will rise, the market can teach a lesson with a brutal and sudden drop. Conclusion of Chapter 3. The fact that your altcoin has doubled in value is great. But don't let the euphoria make you enter at the wrong price. Because if you just buy, without analyzing the technicals, without knowing who's selling, without an exit strategy, without risk management, then you're not a trader. You're just a speculator hoping for luck. Remember, impulse buying equals impulsive loss. Don't let FOMO push you into buying at the peak and getting stuck while others take profits. Chapter 4. Look at other alternatives and set a tight stop loss. So here's the thing. When the market is red hot like it is now, FOMO isn't just a trap, it can be the main cause of sudden losses. That's why we need to start discussing two important things: strategy diversification and real-time risk management, especially through the use of tight stop losses. 1. Explore alternatives beyond spot trading. When the market is in a high-energy state, traders often focus solely on the spot market, but there are many alternative strategies that can be more flexible and even safer. Some alternative options: scalping or short-term swing trading. If you're skilled at reading candlesticks and momentum, this could be a good choice. Take small positions, set small targets, but exit quickly. Trading futures with low leverage. Not for all in, but with a strict stop loss. This can be a way to ride the momentum without buying spot at the peak. But this requires high discipline. Mechanizing entries with dollar cost averaging. If you're still confident altcoins will keep rising, you can split your capital into several gradual entries. Don't FOMO all at once. Temporary staking. If you already have some altcoins that were purchased at lower prices and don't want to sell them yet, consider staking for extra accumulation. Temporary rebalancing to stable coins. When BTC dominance starts to ease and altcoins haven't broken out significantly, you can park some funds in stablecoins to maintain liquidity. The key is not to be fixated on a single trading mode. The market is volatile even when it's green. Sometimes green signals that it's nearing a local peak. We must be agile and adaptive. 2. Stop loss. Not a sign of fear, but a mark of professionalism. Stop loss isn't for cowardly traders. It's a sign that you understand the market is brutal and unpredictable. There's no guarantee today's green will continue tomorrow. Even BTC can drop $5,000 in a day if there's major bad news or massive profit-taking by whales. Here are some stop-loss approaches you can use. A. Fixed stop loss. Set your loss tolerance limit from the start, e.g., 5 to 10% of your entry price. This is suitable for those who can't monitor the market constantly. B. Trailing stop loss. Raise your stop loss as the price rises. If the BTC or altcoins you hold suddenly correct, you'll still be safe and profitable because the SL follows from below. C. Support level-based SL. Set the SL below an important support level. For example, if ALTX has just broken out at 20 cents and its new support level is 18 cents, then your SL can be set at $0.1790. You lose a little, but exit before it crashes. D. ATR, average true range, based SL. More technical. You look at the coin's daily volatility, then set the SL according to its reasonable movement range. This can help avoid setting the SL too close, which is easily triggered by market noise. Mindset. Failing in one trade doesn't mean total failure. If you enter the altcoin market now and make a wrong move, it's not the end of the world. As long as you have entered with healthy funds, have exit targets and plans, and your stop loss is in place, then you can try again at the next opportunity. Money can be re-earned, but a mindset damaged by FOMO takes longer to recover. Conclusion of this chapter. Don't just focus on buying because the market looks safe. Set an exit strategy from the start. Consider alternatives, scaling, rebalancing, or even holding stablecoins first. The key is to set a stop loss like you'd wear a helmet on a motorcycle, not because you expect to fall, but because you know the road can suddenly turn into a gladiator arena. So, crypto friends, if you're feeling FOMO today, your heart racing as you see the charts turning green, that's normal. You're not alone. But as we've discussed from the start of this episode, the crypto market always tempts with euphoria, but those who survive are those who can stay sane and disciplined. In the current situation, with Bitcoin soaring and altcoins starting to follow suit, we need not only the courage to enter the market, but also the wisdom to choose wisely. Remember, every buying decision should be based on a plan, not emotions. And once you've taken a position, don't forget to protect yourself with a realistic stop-loss order. Don't just sit back and hope for the best. We also discussed earlier how the rotation from BTC to altcoins is not a blind buy signal, but a moment for selection. Don't be tempted by coins that have risen hundreds of % without knowing their fundamentals. You might end up buying at the peak and getting trapped in a downturn without an exit plan. In a phase like this, the best approach is to be patient but vigilant. Choose assets with clear projects, know who the developers are, check liquidity, and don't forget to monitor macroeconomic conditions. Because even though crypto looks bullish, global conditions can still trigger a reversal at any time. Don't get tired of reviewing your portfolio regularly and ask yourself, if the market drops 30% tomorrow, am I ready? If the answer is no, then you're not ready to dive deeper. Lastly, as usual, let me wrap up with Mr. So's 5 crypto rules. Today's version is a bit different to keep things interesting, but the meaning remains the same. 5 principles to survive crypto volatility. 1. Don't use money meant for food, electricity bills, or loan payments. 2. Don't over-leverage, so you can sleep soundly. 3. Prioritize your portfolio, 70% BTC, 30% altcoins, not the other way around. 4. Always have cash on hand, so you can buy the dip, not just cry when prices drop. 5. Think long-term, because sudden wealth is a myth, but profits from patience are real. If you like discussions like this, don't forget to subscribe, turn on the notifications, and share with your community friends. Help this channel grow so we can keep creating educational, honest, and no-nonsense content. See you in the next episode. Stay rational, stay strategic, and always DYLR. Mr. So Crypto signing off. Peace.